Good morning, my MMTs, worldwide, international MMTs. Everyone's important to me. On the S&P 500, correction 1, correction number 2. Last week selling on a weekly level below the 10-week and 20-week is bearish. So what? The last lows were right here when we corrected first, and we rallied right up off of them, and because it was a bull rally pullback with another bull rally high, with the bull rally pullback for now, and we're going to be range bound with high volatility. Some of the selling that you see here, I'm only going to say it, MMTs, because it's a new group of people and a new group of students. When I was overbought here, MMTs, at 87.92% on this cycle, now the S&P on a weekly cycle, 63%. It's not nearly as overbought on this reversal as it was. However, the short-term bearishness is that you're closing below key bull rally weekly moving averages, my friends. My friends, as bull rallies happen when weekly moving averages are going up in value. The blue one is a 10-week. This is a 20-week. We're below it, just as we got below the 10-week one time here in the whole 2011 rally. The following week, though, it was over, man. We gapped up. That was it. That was the end of the reversal. Nice reversal. Great buying opportunity. Went from the high here on the S&P, right where I said it was going to be, at 1344. I said they were going to get off board right up there. Then we came down to the low. We had right here, the low was 1249. Almost a 100-point correction on the S&P to rally to all-time overbought cycle here. We started to turn here at 83% DS, and bearishness is going to set in with the bull. So what? We're going to get to a point where the oversold part of a trade will come in when that day comes. On this daily chart on the S&P 500, what the standard tech chartists around the world and technicians are going to look at is this right here. But they're always $1 late and $1 short. What was wrong with getting up here when we called a reversal? Go to the home page. Go look at the dates. I'm sorry to tell you. 429, correction around the corner. 5-1. We said that May was going to go down. All the live analysis. We hit our target, 1370. Counter rally. Counter rally. Boy, look at this wonderful 4-day counter rally. I made a lower low. How do indexes, how do you know they're going to make lower lows? Because they were overbought. Now, let me explain you. Here, on this MACD reading, which consists of a daily sell signal, that's what the S&P is in. So what? They're going to get oversold, and we're going to bounce. And the leadership name in here, hold on, there's some leadership names in the S&P 500 that perform well, that have good earning cycles, that are going to continue to do well. And every time we have a bull rally pullback, it's the end of the world. For most of the bulls, that's what they think, but it's not. That's a great buying opportunity. There are going to be some really good leadership in here that if the S&P is oversold, the leaderships in the S&P, they're the ones that took this index down, and they too are going to be oversold. So when the S&P turns, I'm buying those stocks only. I'm eliminating my risk to 90% profitability to versus 10% down risk negativity. I'm going to have 90% in my favor, or I won't make the trade for overnight, because it will be 90% in my favor to want to hold something overnight. If I want to hold the shorts all the way off of the reversal all the way to down here, I've made lower lows since I called it. I had counter rallies. I made lower lows. I had counter rallies. That brings the bull in, bam. That brings the bull in, bam. That rally brings the bull in, bam, and you make another lower low. Bulls get triggered in at every market low. But then you make lower lows because the trend that started here has not ran its course. We are going to get closer to where that this S&P right now is 19.63%. When the S&P was overbought on the daily, you were at 91%. And what happens with public traders and public investors is they don't know what the realities are. I am not overbought at 19.63% because I'm not. That means that the correction that we have had, which is really healthy for the market, to create new buying opportunities within overbought cycles, oversold cycles. You want to learn how to do that? We will give you a private training course. If you got about $10,000, we'll teach you what overbought and oversold is, and you can have a 5-day course for about $10,000 to learn what overbought and oversold is, and then you're on your way. Good luck thereafter. Now the MMTs are here for a year. So they're going to go through lots of overbought cycles and oversold cycles and trading leadership stocks and sectors and indices and making good money when bull rallies return. When the bull rally pullbacks are over, the shorts are over. So I'm getting short all the way down, and then I'm going to get long again. That's just the way markets work in a calendar year. Overbought, oversold, seasonality, this, that, earnings are coming. We're in the middle of the year. January was a good month starting out the year. And one thing about the S&P, I'll be bold enough to say it though, between now and the end of the year, at the very end of the year, we might not end up any higher than this right here. Right here. What is that number? 1344 at the end of the year. We probably won't be any higher than 1344. And what does that mean? That means that we're going to have ranges that are made lower levels. If this weekly moving average continues to sell down, the S&P stands to hit 1222. That's going to be that 50-day moving average. That's going to be lower than the original 2000 low that was put in that we called for. And that was on 3/13 week. So what will happen with the bull? Stop market orders mechanically get taken out. We're going to see if that low holds on the S&P. We're also going to tell you that on this weekly chart in your training is that this MACD over here is still at 30.12 when it was up here at this ridiculous at 41. It's not nearly as overbought, these bars. When they get up here, they have to come down. You see that? Like in 2010. We are not in a weekly sell signal. Bull rally is still in play. And what I mean is that the bull rally trend is in play with the bull rally reversal. Let's get down to the nitty-gritty of it. Is if we break this line, we're going to get down. It's going to create an oversold condition. There'll be a big rally off the bottoms when that comes. I didn't say that that was Monday, nor did I say it was the following week. I said when that cycle does it, that will be when it will happen. Understanding overbought, oversold, understanding bull rallies, understanding bear rallies, understanding overbought, oversold, understanding how do I make a lot of money off of these moves and why am I going to? We've got a very good track record. You want to explore my track record? Then you go get it on right now over there on that S&P 500 index analysis on the stockmarketfunding.com homepage, where all of these daily movements, I'm below the 100-day, the 10-day is going to cross over. All of these are bearish now. Don't get me wrong. Because that's what happens is you go from bull cycles into short-term bear readings, but the bull rally has not left yet. It's still in play. And the S&P could come down here and hit that daily moving average, and we could come down and bounce like a New York jet. We will set it up. The markets are going to set things up. They're going to set up discounting the earnings that are going to be weaker in July. So what? If we come down well off of these highs as we are, and we price in those earnings ahead of time, all the people are going to say, well, gee, they missed by 2 pennies and their guidance is down, but why is the stock up $3? I'm sorry, the market priced those earnings in, and markets are forward looking. They're forward looking. So as we move forward into next week's trading, we're going to see this key level right here on the S&P. We're going to see if this key level on the S&P, here, let me clear those lines. We're going to see at the key level here, my friends. This is it. You're sitting on it right here at 1,300, my friend. Last time over here in February, we pulled back and we burned, man, to the all-time highs. Bull rally. Bull rally here, pull back naturally, but a bull rally top again. And here on Monday, MMTs, if we break below it, we're going to come down and basically, like I said, over here on a short-term level to get entries in good quality stocks like Caterpillar, like FCX, like Joy Global, like there's many of them, Mosaic, Potash. The leaders in commodities are going to hit bottoms and bounce. Things in the oil patches are going to hit bottoms and bounce. Natural gas stocks, good stocks with good sound fundamentals within market corrections will bounce and go higher. But I don't believe in holding something all the way down to the next buying opportunity. I like to buy them and sell them when they're going to not go higher, and then short them when they come down. That way I'm getting both sides of the market in my favor. I'm making money when they rally, and I'm making money when they fail, and I'm making money in the bear short. So bear shorts work in times like this, and bull rallies work when they're done. Bull rallies start again. That's the S&P. Trade management will be that we will be picking out 2 of the best S&P 500 stocks that will be traded. The other 498 stocks in the S&P, you don't need to be concerned with or even watch them. 2 of them pay you big. That's what you need. That's what we're going to get. That's the conclusion of the S&P 500. There is the conclusion of the S&P 500 daily chart. It's bearish. So what? So what? Let the public worry about it if it's bearish. It's bullish for us, because when we break down and shake the sellers out, the buyers out, and the sellers are all out, then we rally again. And I am looking forward to taking you through that journey on the S&P 500.